Oh, hi everyone, it's Susie Crypto Granny here. The date's the 8th of February 2024 and the time in Europe is 20:09. So I thought I'd do the podcast a little bit different today. I've got the news stories, but less news stories and more analysis to how I see things in the overall view of all fiat markets as well as cryptocurrency markets and what it means to me. And with this, I give instructions in terms of how we can make money. And to me, it's all in the data. So even in this data, this information I give you today, fiat markets as well as crypto markets, you can literally do 11 new investments just by looking at the data. So I really wanted to, do it this way so that you can understand it's all in the data to how to make money. Okay, it really, really is. So let's go through the news and you'll see what I mean, right? And there's 11 new instructions, and you'll see what I mean. So we've got to the stage where equity markets are all-time high. Even in Australia, the equity markets are an all-time high. Other equity markets are all-time high, excluding China. And we know the S&P 500 in the US is nearly at 5,000 points, which is mega. Okay, absolutely mega. And at the same time, we've got the Aussie dollar coming off, the US dollar rising, increasing all the time, the NASDAQ at the all-time highs, as well as tech stocks, big cap tech stocks within the NASDAQ, where Apple makes up 9.5%, Microsoft makes about 5%, and then at the same time, we see the Russell 2000 going down and negative because no one's buying small caps, but they're all buying the big caps. And we see the volatility index in the US market at an all-time low, given there's a lot of risk within fiat markets, i.e. bond yields are going to go up big time, and according to my analysis. Yields up, price down, which leads to very quickly an unsustainable equity market in the US, okay? No doubt about it. We find that Brent crude is still very cheap. Gold is still very cheap. Gold is a hedge against inflation. It's only 2,035 against 32 ounces of gold, which that should be, not 42. And essentially, the US bond yield is too low given inflation and given the Baltic Dry Index, which is very inflationary. It's at 150% already in the last year, and it's about transporting goods around the world. And if that's up, clearly inflation is not dead yet. And the price of goods and services is going to go up even more because of the Baltic Dry Index, which is a leading indicator. So we saw the NASDAQ, the Dow, the equity markets at all-time highs, near their all-time highs, right? Forgetting about anything that's going on within the fundamentals of the US economy. Like, for example, the retail banks are getting killed. Okay, they can't get funding and they're getting killed. People are putting off people. The tech, IT tech, is getting less and less, as we know. And there's a lot of people losing their jobs with crypto technology as well as everything else. So we see all these tech companies in the market at all-time highs. And then we go to Australia, the same story. Europe's the same story. And then we come to the futures curve for 5-year notes, which are starting to sell down, interest rates going up, gold starting to move up in the futures market. We see soybeans going up, wheat, all sorts of things, okay? So this is where we're at. And with this, we can develop a trading strategy, as simple as that. One, the first buy instruction would be to buy commodities. They're too cheap here, oil and gold for one, because we have inflation, and the cost of delivering goods globally is going up, and oil will rise because of that. The cost of fundamental goods being shipped around the world, plus there's wars, 43 wars in the rest of the world, and oil is bound to move up regardless. The fact that the S&P is at an all-time high, and so is everything else, and the dividend on the equity market is extremely low. The Sharpe ratio, you put $1 in, you're likely to get 60 cents out, is a shocker, and you don't get paid an equity premium for the risk that you're taking. So I'm saying to people, get ready to sell the S&P 500 and US equities. These valuations are not sustainable. Excuse me. So number one, we buy commodities, 10% of our portfolio in commodities. Number two, if we have 60% of our portfolio in commodities because of, superannuation funds or your pension, then you should be allocating away from equities because it's not sustainable. On a fundamental basis and a technical basis, it is not sustainable where it is. And I'm actively selling equities, not physical equities, but again, the indices. The treasury bonds, are too low. Okay, it's not reasonable in terms of fundamental analysis to see them so low in yield when we have inflation, which hasn't gone away, and we have a situation where the small retail banks are starting to fall over. Okay, so bond yields are too low in yield and too high in price, and we will see a curve steepening thing take off, where you want to be more short the 10-year yield because it's too low because there's inflation in the system, right? But either way, yields are going to go down in price and up in yields. Number three is our next trading instruction. We have deflation in China. They're looking terrible. The second or the biggest economy in the world, and yet their growth is shocking, and it's getting worse and worse. They're selling the stock market. Will have a contagion effect to other stock markets in the world. Domestic demand is very low. They don't know what to do, and it's a shocker, which will force domestic product growth down, which overall, again, is very bearish for equity markets overall. You could sell the Chinese index, you could sell the DAX, you could sell the UK index, you could sell the US, or even individual stocks like Microsoft and Apple. Apple has priced for perfection, and yet they've lost all their ground in China because people aren't buying Apple anymore or Apple products. There's a lot of tax against them, and also they can't produce in China. And yet Apple is at an all-time high with incredibly low dividend yields and high price earning ratios, right? And again, the market was pricing in cuts in the yield curve, but the yield curve is not cutting. The FOMC, Jeremy Powell, the chairman, said we are not cutting interest rates. So the market got beyond itself, right? Beyond itself, and yields are too low. And it's as simple as that. If we go to other information, we find that, a lot of companies are starting to fall off their perch. A lot of bankruptcies, all sorts of things, right? And this is problematic. Also, we have US commercial market looking terrible, and we see a contagion effect in Germany, right? Bonds are slumping. In other words, they're selling off because the commercial real estate property sector is doing very badly all over the world, and that will eventually contagion effect into the retail real estate, okay? And it's a shocker. Sell commercial real estate, going down and ongoing, too expensive, and it will feed into the retail property market in certain countries. Not like Amsterdam, where there's no supply, hardly of anything, and, it's a different market, but most other normal retail markets get affected by commercial property. Because if the commercial property is going down, what they do is they change from commercial to retail, and they develop retail property apartments, more supply, cheaper, and thus you will see the price go down. Now, MicroStrategy's out there still buying more cryptocurrency. Very, 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 very smart strategy. High risk, yes, but they put their money where their mouth is. They now hold unrealized profits of something like $2.2 billion. You make more holding Bitcoin in a year than you make, in a company for 30 years, right? Now, Michael Sayer has put his money where his mouth is because he knows there is no Bitcoin supply, none. The exchanges have no supply of Bitcoin, okay? More buyers are going to come to this market every day, and we see that with all the networks that are increasing their client base, their addresses, their trading addresses, their active clients. And we see more institutions and banks and fund managers coming into this market. This is a no-brainer, people. You will eventually not be able to buy Bitcoin for under, God, $300,000 per unit. It is a no-brainer, okay? Makes sense. Number 7, the crypto market on valuations compared to other risk markets with their credit markets, high yield, equity markets is extremely cheap. The PE is not even at 0 compared to the NASDAQ at 31 price earnings ratio. If you don't know what these mean, I've done stuff on it in our education, but please look it up. You know, compared to the Dow, the PE of 28, right? NASDAQ at 32 or something, and the S&P at 26. When average growth, the price earnings ratio should be 15, right? We know it's extremely expensive. And yet the crypto market probably has a P below 0, but we'll in this example say 0, right? And every other market's got a P of 25 to 35, right? Or some are more expensive. So the crypto market overall, we know is cheap. We know it's seriously cheap. And we here as a business invest in crypto sectors and industries that are going to do extremely well by the crypto technology. Sorry, I've got a typo there. Technology, right? Simple as that. So we go the sector and the industry with the best technology in that sector, i.e. the payment sector. Very simple. XRP is the best in that sector. Why do I want to buy a Stellar when it's secondary to XRP? I put my money in XRP for 5% of my portfolio. The best crypto coin with its own technology, not a token, in XRP. Then I go, what is the best for layer 1 or supply chain management or pricing oracles? What industry which is going to do extremely well by cryptocurrency technology? Supply chain management more is VeChain, and the valuation is seriously, seriously cheap for the money they're making and the clients they have. They make a lot of money. What's the cheapest and the best in terms of pricing oracles, right? Real-time prices. You can validate those prices all the time. Without proper reval prices, people can lose a lot of money. Okay, it's another sector. What's the best in that sector? And at the moment, Chainlink stands alone. Okay, really, it really does. I put on 2 clients a day, they make a fortune. It's no wonder Chainlink is doing what it's doing. Okay, and the price is going through the roof and it's cheap. Even at $18 something, we bought it at 7. It's cheap, people. This thing is worth over $100 more Chainlink per unit, right? Again, we might say, what other crypto has unique characteristics that other cryptocurrencies do not have? And we might say artificial intelligence. Well, in artificial intelligence, the graph is in there. In artificial intelligence, IOTX is in there. Again, what is the best crypto in that sector of AI that we should be buying? Okay, I hope you understand that. So when we go to the cryptocurrency market valuations, let's have a look at this. We are on live CoinWatch, right? And again, it shows things are cheap because when we had a big mass rally in crypto, we were over 3 trillion. Currently, we're only at 1.736 trillion. Bitcoin dominance is 50.95. It may stay high because there's no Bitcoin supply left. And we're finding the exchanges are paying different prices for Bitcoin. And they're even settling Bitcoin 7 days later because they don't have the supply of Bitcoin. In that situation, you've got 9 apples in the world with a population of 8 billion. Half it by 4, or even half it again, or even extreme, you could still have 1 billion people coming to the crypto market, right? With no supply of Bitcoin. It doesn't take a rocket scientist to tell you where you think, or where I think Bitcoin's going to go. XRP, 1.78%. Ethereum, 16.56%. All these are making money, a lot of money. Bitcoin daily makes $3 million or more on fees. Ethereum, because it's so expensive, makes 10 million. because of fees and rapes and pillages people. Tron makes a lot of money. So does Link and so does Solana. Yes, Solano's technology, had a 5-hour, it wasn't working. The point is Solano's in many tokens. They're in NFTs. They've had their own exchange. They have their own phones. Their cryptocurrency technology can do 250,000 payments per second. They could even be in competition with Ripple, right? Amazing story, amazing technology, and it's still cheap at $100. Even 2 years ago, Solana was at $280. You see my point here, right? Binance, an incredible exchange, the biggest in the world, has been harassed by the SEC, and yet it's only at $316. And the earning capacity and the revenue of Binance is unbelievable. It's hysterical because they make so much more money than anyone in the fiat markets. We saw Tether the other day make billions over and above some of the biggest investment banks in the world, right? And they've all only been around for maybe 6 or 7 or 8 or 9 years. AVAX is another story. Tron is an amazing story. It's so cheap, people. It's a joke. They're in real-time weighted assets. They have the most trading in the market, right? They're the most clients. I mean, these valuations, people, are just ridiculous. I've got to tell you that at 1.736, it puts this compared to other asset classes with a price earnings ratio of zero, no future earnings, right? And yet a lot of these companies have been around for a long time. And their networks have, for example, Bitcoin, they're making it a shitload, to put it bluntly. They've been around for nearly 11 years, Ethereum 9, USD Tether 9, Binance only 7, Solana 4, XRP 11 or 12 years, and it goes down, but they're making an absolute shitload, right? More than the equity market in terms of revenue, right? And we're going to continue to see Bitcoin outperform Ethereum. I believe that because it's a better story, because Ethereum has got a lot of problems. And I do believe we should be seeing layer 1 perform better than layer 2, which is not even using its own technology, okay? This is cheap, people. Cheap. And what we find is in the equity market, people are long and wrong. And honestly, it's a matter of time, right? Number 9, buy more Bitcoin, no supply. Simple as that. Buy more layer 1 and layer 2. Yes, Kraken has got into the Netherlands. I don't like Kraken much as an exchange, and they've got, they've allowed now to basically offer cryptocurrency services, which again is more clients, right? More clients, and they're in Europe. Again, AVAX is putting on more clients. It's still very cheap, still extremely cheap. 10 instruction, buy more AVAX, right? Because they're putting on more clients all the time and upgrading their network, right? Not only that, Citigroup uses AVAX to price and execute simulated FX deals. This is how good its technology is. And Citigroup is one of the biggest investment banks in the world. I mean, to me, this is a no-brainer, honestly. Solana is still too cheap. Buy Solana, right? Its Ethereum virtual machine can do everything Ethereum can and more, and it's adding more clients all the time. Tron, again, number 12, it's so cheap. It's a joke. It leads in stable coins, real-time weighted assets by tokenization. It has more traders than anyone else, and it is an absolute joke, right, to the valuations. Now, again, let's take a pause. Let's look at our portfolios, okay? Let's go into our last portfolio set up on the 1st of August, okay? Now, I'm very confident that we're going to make a lot of money out of this. We started with acquisition costs of 15.49. We buy incrementally, and we have a lovely risk profile of different industry sectors are going to do very well by cryptocurrency technology. And these are the best coins in the sector. Bitcoin stands alone because it's the poster child, right? The new poster child, the first of the cryptocurrencies, and it's an absolute poster child, and it stands alone because everyone knows about it, right? So this is what we're in, people. Let's collapse this to make sure, again, we bought Bitcoin at 28,961. Now, my subscription is $65 a month, and we've already made $3,000 within a matter of 7 months, right? But we hold this thing, this valuation of 20% up. I'm expecting, 10 times more because the crypto market is so cheap, right? It's incredible. So we buy Bitcoin at 28,961. It's up 57%. And this is not even annualized, right? Chainlink, we bought at 749. It's up 142%, going higher. XRP is still going to struggle. I'm not buying anymore because the SEC is on their back and it's just going to struggle, and it's down 25%. We love XRP, but we don't hold out all our money in XRP because we are professional fund manager investors. Polkadot, another amazing story, so cheap. We bought it at $5, 37% up. B-Chain, really cheap, an amazing story, up 34. IOTX is incredible, but we'll hold that. It's fine because it will come back and higher, at its highest level. Cosmos, cheap as chips, multi-asset interoperability with Cosmos hubs. Amazing technology, guys. Tron, we just bought it the other day, right? Up 4. And Conflicts, I don't have a problem with because it's the only cryptocurrency technology that, apart from VeChain, the Chinese allow, okay? It's as simple as that, right? And this is the whole story, people. It's about making money, right? About making money. Now, even tonight, I'm trading my accounts and I just bought more Bitcoin and everything else. And even tonight, it's gone up quite a bit, right, already. And, again, it's about making money for sure. And I'll show you that too.